Welcome to our U.S. briefing program. Today, we dive into the dynamic world of global economics, starting with China's stock market. Amidst the ongoing trade tensions with the U.S., analysts suggest that Beijing's interventions may not fully address deeper economic issues. Instead, a focus on investing in domestic industries could lead to a more robust economic transformation. Next up, we have exciting news from Nvidia, which is set to invest a whopping $500 billion in AI infrastructure in the U.S. over the next 4 years. With the production of their latest AI chip already underway and new supercomputer plants being built, Nvidia is gearing up to meet the skyrocketing demand for AI technology, all while aligning with President Trump's manufacturing goals. Lastly, we turn our attention to President Xi Jinping's recent meetings in Vietnam, where he emphasized the importance of solidarity against U.S. unilateralism. As both nations seek to strengthen their economic ties and navigate the complexities of international trade, Xi's visit highlights the growing need for regional cooperation in these challenging times. Please stay tuned for more detailed insights. South China Morning Post reports that the global markets have been experiencing significant volatility since early April, largely due to the escalating trade war between the U.S. and China. President Trump's tariffs have pushed both nations towards a precarious economic decoupling, creating a fragile supply chain that could ultimately harm the U.S. economy. Amidst this turmoil, China is taking steps to stabilize its stock market by implementing measures such as purchasing exchange-traded funds and increasing state-firm share buybacks. However, these interventions are merely temporary fixes and do not address the underlying issues such as weak domestic consumption. Instead, experts suggest that China should leverage its stock market to fund economic transformation and technological advancements, exemplified by the upcoming Hong Kong listing of contemporary Amidst technology, which aims to raise substantial capital for expansion. In another article, South China Morning Post highlights Nvidia's ambitious plan to produce up to $500 billion worth of AI infrastructure in the U.S. over the next 4 years. This initiative comes as the company begins production of its latest AI chip at a new plant in Phoenix and collaborates with partners to build supercomputer manufacturing facilities in Texas. Nvidia's CEO, Jensen Huang, emphasizes that this move will bolster the supply chain and enhance resilience amidst growing demand for AI technologies. The announcement is seen as a victory for President Trump's agenda to bring manufacturing back to the U.S., even as the tech sector faces challenges from fluctuating tariffs. The significant investment reflects a broader trend among major tech companies to ramp up their domestic manufacturing presence, despite some plans being in motion prior to the election. Additionally, South China Morning Post covers President Xi Jinping's visit to Vietnam, where he urged for solidarity against U.S. unilateral actions. During his meetings in Hanoi, Xi emphasized the importance of cooperation between China and Vietnam to safeguard global free trade and maintain stable supply chains amidst the ongoing trade war with the U.S. He proposed several measures to deepen bilateral relations, including enhanced leadership exchanges and economic ties, as well as addressing maritime disputes in the South China Sea. Xi's visit coincides with Vietnam's strategic positioning as a manufacturing alternative to China, highlighting the importance of regional partnerships in the face of external pressures. Both leaders reaffirmed their commitment to multilateralism and cooperation, aiming to navigate the challenges posed by their larger neighbor, the United States. Australian Broadcasting Corporation. President Donald Trump's tariff policy has seen significant fluctuations, particularly regarding the treatment of consumer electronics imports such as smartphones. Recently, the administration announced a 90-day pause on reciprocal tariffs, reducing rates to 10% for most trading partners, excluding China. This decision brought temporary relief, with certain electronics exempted from the hefty 145% tariffs previously imposed, allowing companies like Apple to import iPhones from India without additional costs. However, confusion arose as top officials suggested that these exemptions might not last long. Commerce Secretary Howard Lutnick indicated that while some goods were temporarily exempt, they would soon be subject to new semiconductor tariffs, a statement contradicted by Trump, who claimed there were no exemptions at all. The uncertainty surrounding these tariffs has raised concerns about potential price hikes for consumer technology, with analysts predicting that the cost of devices like the iPhone could skyrocket. South China Morning Post. In a proactive response to the looming uncertainties of U.S. tariffs, South Korea has ramped up its support for the semiconductor industry, increasing its financial assistance package to approximately $23 billion. This move comes amid heightened competition from Chinese firms and a pressing need for local manufacturers to adapt to a challenging global market. South Korea's semiconductor exports accounted for a significant portion of its economy, and the government aims to bolster its industry to navigate potential fallout from U.S. tariff policies. As President Trump hinted at imminent tariff announcements for imported semiconductors, South Korean officials expressed intentions to engage with the U.S. to mitigate adverse impacts on their domestic companies, emphasizing the importance of supporting their vital tech sector. South China Morning Post: the recent pause in U.S. tariffs has resulted in a surge of orders for Vietnamese factories, particularly those owned by Chinese entrepreneurs like Jason Wu. After a period of stagnation due to anticipated tariffs, Wu's factory has seen a rapid influx of orders as American clients scramble to ship products within the 90-day reprieve. This situation reflects the broader uncertainty faced by Vietnam's export sector, which has been navigating the complexities of U.S.-China trade tensions. As Chinese President Xi Jinping visited Vietnam to promote cooperation, Vietnamese business owners expressed cautious optimism about the potential for reduced tariffs, while simultaneously preparing for any adverse outcomes. The unpredictable nature of U.S. tariff policies has left many feeling vulnerable, yet resilient, as they adapt to the shifting trade landscape. Nikkei Asia reports that the Trump administration has frozen over $2.2 billion in grants and $60 million in contracts to Harvard University after the institution rejected demands to limit campus activism. In a bold letter to the Harvard community, President Alan Garber declared that the university would not compromise its independence or constitutional rights, stating that no government should dictate the educational policies of private universities. The administration's demands included implementing merit-based admissions and hiring practices, conducting audits on diversity views, and banning certain student organizations. This action marks the seventh time the Trump administration has withheld funding from prestigious universities, aiming to exert political pressure and influence academic policies. The government's stance has sparked protests and legal challenges from Harvard alumni and faculty, emphasizing the importance of academic freedom and university self-governance. Al Jazeera highlights President Trump's plans to introduce tariffs on semiconductors and pharmaceuticals while considering easing auto industry duties. The administration has launched investigations into the national security implications of importing these crucial products, reflecting ongoing trade tensions, particularly with China. Trump has been vocal about reducing reliance on foreign-made chips and encouraging domestic production, as exemplified by Nvidia's announcement to invest in U.S.-based manufacturing. Despite a recent pause on reciprocal tariffs, the administration's fluctuating trade policies have left businesses and financial markets in turmoil. Trump's flexibility in negotiating auto tariffs suggests a willingness to adapt to industry needs, while U.S. stocks have shown positive movement amid these developments, indicating a complex and dynamic trade landscape. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.